All right, hey everybody, happy Friday. It's casual Fridays here in the office. Markets had a great day, a good reaction to that jobs report, and really, it was in line with expectations. It was payrolls that were really greater than expected, and that was the important data. Um, Anyways, is payrolls was what was important. Less than 100,000 or so, and this market would have rolled over pretty substantially. And I think it was like 130,000 print or something along those lines. So that beat expectation. Unemployment rate right in line with expectations. So hedge funds are continuing to load up on shorts, which, I mean, if you look at, this is a fantastic level if you want to get short. I mean, the risk to reward is pretty good here. However, there's still so much negative sentiment out there, where any sort of good news is gonna make markets rally. And that with, institutions extremely short, would make me suspect about getting short myself. Typically, you want to play the other end of sentiment. When sentiment reaches extremes, you want to play the other side of that trade. And, whether that's institutions, whether that's retail, whatever it is, you're going to look at exposure as well as just what people's opinions are on things. So typically, when those levels reach, some sort of extreme level, I like to play the other side of that. So, with all that being said, my positioning is very light. Super chill Friday. Placed lots of lots of day trades today. We'll get into all that here at the end of the video, but so stick around for that. Let's see here. Let's go over the positions. All right, so still in that Bitcoin position and IBIT calls and IBIT. August 15 is the expiration, $61 strike price, $485 is the average cost of those. Those are currently $420. Bitcoin had a pretty decent day today, although at the end of the day was sort of weak, but overall pretty decent. Oh, look at this, after hours, it's going back up a little bit. It's really nice to see Bitcoin performing well today. I was expecting Bitcoin to break below 100,000, and would still have been fine. I would have still held this position, and probably added to it. However, now I believe that if Bitcoin's going to roll over from here, I would not be as bullish in the short term on it. But so now it's fine. It's whatever. I don't know. Yesterday was weak. Today was strong. My opinion on this in the intermediate term basis has not changed. Day to day rarely changes my opinions on things. And especially, if I have a decent amount of time to expiration on those calls. So, you give positions every chance you can to work out. At least that's what I like to do. That's my, strategy is I like to give things time to work out. Weekly chart, I don't know. It looks okay. I think Bitcoin miners performed well today, so that's a good sign. Let's see this on a monthly chart. Yeah, I mean, no, nowhere near extreme levels. The super bullish. See, weekly charts, like, I don't know. I don't have an opinion here on a weekly chart. Daily chart, whatever. Let's go over some Bitcoin miners here. So while we're thinking about it, so Marathon, had a good day, 6% up day. But again, there's no sense in going after these unless for some reason you just want to, But, in the past, Bitcoin miners were used to outperform Bitcoin. You no longer need Bitcoin miner exposure to outperform Bitcoin. However, with that being said, it's extremely important for the network security if these Bitcoin miners, for these Bitcoin miners to perform well. So it's nice to see HUD 8 back up here. So that's good. Bitfarms looks terrible. And I think we went through everything. CleanSpark. So, again, it's good to see that when Bitcoin, has a positive day, that Bitcoin miners also are positive. Why is that important? Well, that shows, like I mentioned earlier, people use Bitcoin miners as a way to, they view it as a riskier asset in order to outperform Bitcoin. I don't agree with that methodology, but that's what is out there. So when an underlying asset is performing well, it's good to see money go further out on the risk curve as another way to corroborate the move in the underlying asset or the underlying commodity, which in this case is Bitcoin. So, very short term, I would say, cool, that's, bullish for Bitcoin. All right, moving on over. Argentina came back from the dead. Little shakeout below the 50-day moving average. It still looks bad, but again, I really do want to give this every chance that I can to work, because here you have an ETF that hit all-time highs after, was this 4 months and a half, consolidating for about 4.5 months after a massive move higher all through here. For many months, this thing has just been grinding away, grinding. So the nice long consolidation, a move back up to all-time highs on nice heavy volume. Set up like this, I want to give this every chance I can for this to work out, because even though right now it looks terrible, overall this is pretty fantastic, right? I mean, all this has done is break out, give some of it back, and that's it. I mean, this could completely roll over below 85 and fill this gap and then even still rocket higher. But I would get out if that's the case. But regardless, I want to give something like this a chance to work out. So that's the methodology on that one. And that's it for, I still longer term positions. I don't know if we need to talk about these every day, but waste management, whatever. I don't know. Waste management, GTX. Again, I don't know. I don't really have an opinion. It's good to see it respecting this 50-day moving average around the $10 price target. If you zoom out and look at this on a monthly chart, this looks very bullish. However, given all this back, it's not that good of a sign. But again, big volume coming in and nice long base. So again, these are things that you want to give time to really work out. This is sort of a turnaround play, and turnaround plays are kind of iffy, but it certainly can work. Okay, there's that. Now let's go over the sectors here. So NASDAQ market's very strong today. everything was up around 1%. Well, I don't know about everything, but NASDAQ, S&P, yeah, up 1%. Coming into the day, I was relatively bearish. Wow, see, and this is really good to see small caps having a really strong day. Again, why is that important? Because those are riskier assets. So, if you're bullish overall on equities, it is good confirmation that money is moving farther out on the risk curve. This still doesn't meet my criteria to go after this, so it doesn't matter. But that's what that shows. Dow, just chilling. Look at this. This is so many, couple weeks of just, I don't know. It's kind of grinding higher, sort of range bound. Again, I still have the same opinion that this doesn't meet any of my criteria to go after this one way or the other. So I'm not. I'm in the positions I want to be in. But now let's go over some single stocks and see what's going on here. So let's go over Mag 7. So we'll see Microsoft. Wow. So Microsoft made new highs today, all-time highs. Again, I don't understand. I understand how people can be bearish. Everybody has an opinion. But at a certain point, you reach the conclusion of, your opinions don't matter in financial markets. Your opinion, it doesn't dictate the price of something. So, what's the point of really having one? So, for example, you have Microsoft, like the largest company in the world, or top 3, or maybe they're number 1. I don't know, one of the largest companies in the whole world. And they're making new all-time highs. So how could I be bearish in this scenario? You can't. Now, with that being said, this is super extended in my opinion, but stocks can remain at crazy extended levels, whether to the upside or whether to the downside, for a long time. So just because this is in a very extended level doesn't mean this can't just keep grinding higher. This is super strange, to see kind of price action like this, but whatever. All right. So there's something that you would put in the bullish camp. Okay. Google up 3%, very strong day, broke out of this bull flag. Yeah, it's a bull flag. Breaks out above the 200-day moving average. So again, you have another one of the largest companies in the world making a very bullish move. Nowhere near extended levels, certainly underperforming its peers, but there is a gap up here to fill. So between 195 and 204 or so, if you want to be conservative, let's say 200. And this gap will get filled. So again, there's another thing to go into the bullish camp. And, you think 175 up there to, 200 is a huge move. And it certainly is a huge move. But at a certain point, Google will fill this gap. I would be confident, in a company like Google to fill that gap. It was some other random companies like, I don't know, maybe they're going bankrupt, maybe that gap won't get filled. But, so again, okay, so there's two things, that you can put into the bullish camp that are pretty big, right? So we're just going through these things objectively. That's it. Apple, looks terrible. That would go into the bearish camp. However, the flip side to that is Apple, a former, bellwether stock since the dawn of time, has now basically become irrelevant. and indexes are still chugging along. So is that bearish, bullish? I don't know. Is it a wash? Okay. We'll go over to Meta. Again, it's hard. So look, this has just been grinding higher, Actually, I would say this is not grinding higher. This is powerful strength higher. You've got gap up, doesn't even fill these gaps, which again, at some point they will, but this shows strength. This shows serious strength. Now again, we're at the same position, sort of like in indexes. What are you risking here? So to start a position, you're already in a position. This is fantastic. I don't know what somebody's price target would be. Mine would probably be right around the 700. I probably would have got out a little bit early, but I'm not in this, so my opinion, it's meaningless. I'm not in the arena here in Meta. However, super strong moves. Okay, so there's that. It's another boom check mark, to the bullish camp. And we're talking overall here, overall markets. Okay, so now let's look at Netflix. Netflix has just been grinding higher, making new highs. Again, how could you look at this and think, I'm bearish, right? Okay, so Netflix. I don't know. What other large companies am I missing here? I don't know, probably, NVIDIA. Just think about this with everything that's going on with restrictions of selling, chips to China, where NVIDIA has a huge inventory of their chips that they sell to China, where the Trump administration just said, you can't sell these anymore. Boom, done. So NVIDIA has a huge inventory they weren't even able to unload, therefore losing lots of money. I don't know the dollar amount. I've forgotten now, but I think maybe it was like $2 billion or something along those lines. A lot of money. Maybe relatively speaking for NVIDIA, it doesn't matter. It fell out of their pocket. But, and these tariffs and trade wars in China and this and that and so much negative sentiment. And yet NVIDIA is very close to all-time highs, shows that, collective market participants around the world are unfazed by all of this. So, therefore, I would be as well. But same sort of theme, again, this doesn't meet my criteria to go after it, but that doesn't make me bearish on a particular asset or an overall market. I would say this goes into the bullish camp. But again, we're in these sort of areas where things you don't want to see rolling over and picking up on serious selling. I can flip bearish pretty quickly, but as of now, it's okay, right? Okay, so, Tesla. Last night Tesla was up pretty big after hours. I was right through here. So, where did this close? 280. Up $20. Is that 8%? After hours, just good old Tesla doing Tesla things, man. I miss back in the good old days. Where was this? Oh yeah, all back through here. This was monstrous. When was this? 2021? Yeah. Tesla and NVIDIA were just rocking. And, yeah. Oh, that was the good old days. But again, see how different this is? This whole thing meets my eye, fits my criteria, fits exactly how I trade. This completely meets my eye. Massive run up, huge consolidation, clear risk to reward throughout all of this. It was kind of easy. There was some days in here that were huge drops, but overall pretty easy to hold through all of this, and just massive. So, and then if you go over to here, it's a completely different feel to me, in my opinion. And if something just doesn't meet my eye, then I pass on it. There's thousands of things to go after, and I'm not going to force something in here. So Tesla, I would go into the bearish camp, but Tesla is Tesla, and I don't know. It once had the view of going farther out on the risk curve, so where you kind of would see the market's appetite for risk for how Tesla was performing. Same thing with ARK, right? Kathy Wood's fund, which I don't even look at anymore. But I don't know if Tesla has that same sentiment anymore. I don't get the sense it does. But what do I know? Okay, ARK. I haven't looked at this forever. I mean, this is kind of funny, but it's not really that funny. But I mean, if you talk about risk management, I mean, this is like a 90% drawdown or 80% or something. You want to talk about somebody that has zero risk management? It's Kathy Wood. But wow, this is up 8.5% today. So again, the capital is moving farther out on the risk curve, and yet people are very bearish. And so again, who knows? This entire market can completely roll over. Again, it's just a game of probabilities. That's it. That's all this is. It's not about being right, wrong, none of that at all. And so, again, this is something you would add into the bullish camp. I mean, 8.5% on Kathy Wood's ARK Innovation ETF. I don't even know what's in this ETF anymore. I've stopped paying attention for a couple years, but yeah, so there's another thing we put into the bullish camp. So we went through, all of Mag 7. Let's look at Palantir. I think Palantir recovered a little bit today. Yeah, I mean, and, pretty convincingly recovered, right? These aren't things that are just kind of like blant up a couple percentage points. I mean, these are pretty substantial recoveries. Again, this is markets shrugging this stuff off. I mean, you want to talk about how easy it is to get bearish after everything that happened yesterday, with Trump and Elon and, creating more instability in terms of how people think. Whether or not that's actually the case is yet to be seen. And all these tariffs, these various trade wars, there's so many reasons to be bearish. The spending bill, wars going on around the world. There's hedge funds like being max short. I know they got plenty of room to work, so they're not max short, but in general, in the last 10 years, hedge funds are max short, institutions very short, very bearish, and yet things are still moving higher. So it makes you think, how much worse can things really get? In all seriousness, this is sort of behavior that you see in market bottoms, let alone markets that are like up, I mean, I still get the feeling lots of people view the world as like completely falling apart, and yet the collective money in the entire world is, disagreeing. So again, this is, like I said, this is something you usually see at bottoms, max short, max bearish news, wars, trade wars, tariffs, all this instability, debt, trying to finance government with bonds, all these issues with bonds. Typically things you see at market bottoms, just frankly speaking, that's true, let alone, something that's up here. But, but this, so, but like, if things do, like I keep saying, if things really do start rolling over from here, it would be very, very bad. There is certainly wiggle room for this to move all through this sort of range, to fill this gap down here, all through here. There's certainly wiggle room, but, if things pick up and really start moving to the downside, I will start becoming max bearish. But as of now, I'm not. So that's just, my opinion, how I view things. Now, again, with all that being said, the risk to reward for me personally is not in here. So one direction or another, I really don't care. Okay, so now let's go through some sectors and see if we can put more things into the bullish or bearish camp. Real estate, bearish camp. Neutral camp. Neutral. Bonds selling off pretty hard today on this economic data that was sort of fantastic. See, the problem is where people mess up is what is expected. And again, expectations are nothing different than market sentiment. So you see it all the time with companies that have a horrible earnings report. But if market participants is expecting the earnings report to be terrible and it's slightly better than terrible, you'll see that stock rallying really hard. So, and the same thing of the reverse. Markets are expecting, you see this in market tops, markets are expecting earnings reports to be through the roof, right? You've got CNBC that has an NVIDIA earnings report countdown, NVIDIA earnings report watch parties. People are expecting NVIDIA, to earn $100 billion yesterday. And, NVIDIA only earns 70 billion, still, crushing it, but they miss the expectations, things will tank, right? So what's important is sentiment and expectations. Bonds selling off, yields up, bonds down, yields up. Oh my gosh, that would be hilarious. Music video, bonds down, yields up. Oh man, you guys hopefully don't know where I'm going with that, or if you do, then you'll find it funny. If you don't, then it's not funny at all. Okay. I still am concerned for bonds. I don't know how anybody finds any of this stuff bullish. The only thing that could be bullish from this whole scenario is how much worse can this possibly get, I mean, it certainly could get a lot worse, but yeah, there is wiggle room in bonds to continue to move lower, but that is super, super bearish if they do. Now, these sort of one-day moves are sort of important, right? About just the overall market's opinion on data that comes out. But the overall general direction of bonds are also very important. What is this, some sort of a bear flag coming in and bonds are just going to keep selling off? That would not be good. So, okay, so there's that. The financials, just kind of grinding higher. Again, I don't exactly know how this would go into a bearish camp. This is all, neutral to me, right? You've got banks, ETFs that are basically at all-time highs. So, you know. Oh, look at this. And then you've got regionals. See, this is really good to see. It's really good to see a divergence of bonds and regional banks. Because all through here in 2022, they were getting slammed as bond and going bankrupt as bonds were. This was a really good trade. We caught this and it was fantastic. I mean, it was really hard not to see this and catch this. I mean, this is a clear break. You know, and this was just prior to the banks blowing up, and then a couple more blew up. But anyways, you know, lots of that had to do with taking massive losses in their bond portfolio. Well, none of them were actually realized until people started taking lots of money out. Then those losses were realized, and that's what caused them to fail. So as bonds are still as bad as they were when regionals were down here and I thought the world was ending, and bonds are still basically at this exact same level since 2022, you know, 3 years later, and regional banks are performing great. Wow, you know, I mean, shoot, look at this. This is super bullish. This is fantastic. This is a nice move higher. A month of consolidating. Almost a month of consolidating. And a nice conviction move higher with closing at the highs. So this would go into the very bullish camp. I have no idea what regional banks are doing. Maybe they've learned from the disaster back here, but I would be sort of surprised at that. All right, so let's just look at some of these banks so we can sort of see. So JP Morgan, let's look at Berkshire Hathaway, since that is in the largest position in XLF. And okay, again, this is good to see, right? So you've got Berkshire really underperforming, and yet financials ETF is overperforming, or still working pretty well. Wells Fargo looks okay. Wow, Wells Fargo. What's Bank of America? BAC? Yes, it's BAC. That looks good. Let's look at Visa and MasterCard. Yeah, so I mean, you got Visa hitting all-time highs. MasterCard hitting all-time highs. So that's what's given a lot of strength to that ETF, to XLF. Again, I mean, you know, these are things that go into the very bullish camp. So I still haven't discovered something that is, you know, truly bearish or of concern yet. So XBI, sort of moving out again. This is showing more appetite for risk. You know, biotech companies are the definition of farther out on the risk curve. And so, you know, again, this doesn't meet my criteria. Gosh, I have like a hair or something that keeps getting in my line of sight. So, you know, that's good to see. Again, like I was saying, this doesn't meet my criteria to go after this. So, yeah, we don't go after it. XLV, these things don't look good. All right, let's go over to, is it on my chin? It's like a little fuzzy. Nuclear energy ETF. Yeah, at all-time highs. Let's see how CCJ is looking. Oh my gosh, it came out. I mean, that's fantastic to see. You've got nuclear energy plays like Light Bridge here. I mean, yeah, I mean, if you look at this, you think, wow, is this extended? It's not. This is not extended. This sucker could rock and roll. Whoa, you want to talk about a base. And you know how the saying goes, the bigger the base, the higher in space. Nuclear energy stocks are just getting started, even though this is, you know, like, 100% in a month and a half. These suckers are just getting started. Wow. Wowzers. And this is a theme that I've been talking about for a long time, is nuclear energy. So, yeah, I mean, what else is in nuclear energy? OKLO. Was this more of like a IPO, it looks like? Yeah, here's some high octane for your portfolio, $20 to $50. What else? What else? Oh, Lou. Are you kidding me? What is this, all-time highs? Oh, we're on a weekly chart. So, yeah. I mean, look at... Are you kidding me? Look at this. Monthly candles here. This is insanity. I mean, this is where serious money is going after. Nuclear energy. Wow. Sheesh. What else is in here? Oh, I think Constellation Energy also has some things to do with nuclear. I don't know what exactly, but I see them mentioned in nuclear energy articles, so I guess I'll take their word for it. And this is actually a pretty decent place. That would be worth it going after here. Wow. Yeah. So, wow. And then you have Shopify up 6%, and people are bearish somehow. Sheesh, man. You guys, if markets continue to move higher, I mean, look out. This thing is going to get crazy. If it does. Marvel way down. Take-Two start doing its thing. Let's look at Caterpillar. So yeah, let's go over industrials. How is industrials looking? Yeah, so okay, industrials, new all-time high. Construction industry, rocking and rolling. Again, industrials hitting all-time highs, and yet the economy is supposed to be terrible. It's, that's what you like to see. That will provide that. Just that sentiment alone will provide fuel for this market if it can go higher. Okay. Let's see how Rumble's doing these days. Oh, my lantern. Thank goodness we're looking at this right now. This is something to go after for me. This is a clear risk to reward, high octane runner. And, and we're going after this one on Monday. Oh, that string is back. Man, I wish I had like a mirror. Okay. Wow, cool. All right, I feel great about what we've discovered. This has been a really good, candid video just about the overall state of things, completely unbiased. Just totally looking at how things are. Broadcom down on earnings. Not that surprising given how extended everything was. Right, so here's something with market sentiment. Clearly, everybody's expecting Broadcom to go to the moon and their earnings report to gain, 1,000,000%. Year over year, 1,000,000%. They still had an earnings beat. You can see that they had an earnings beat. I have no clue any of the details about this, but you can still have a beat and a great earnings report. But since expectation is sky high, this sold off. Again, I don't know what the options market was pricing in terms of volatility, what expected move would be, but all those factors go into it as well. So that there's where sentiment's really important. Let's see things like SoundHound. Yeah, see, this looks pretty good too. We did catch this move. That was fantastic trade all through here. That was really good. It always gives me the bug to go after single stocks, but it's always a no-no, as I'm going to go after Rumble. Let's see this on a weekly chart. Let's see if there's a reason to not go after this. There's not a reason not to go after this. There's most certainly not a reason not to go after this. This is definitely something that is worth risking money to see if this trade is going to work or not. I mean, you're talking... Oh, man, what would I do? What would I risk in here? I would probably risk below this day's close. So, less than $1. Let's see. So then 10 is pretty clear and obvious. So, yeah, it's all right. Okay, so that was it. Super candid video about how things are going. Let's see. Okay, here we go. Royal Caribbean. Okay, cruise lines. All-time highs. I guess what? 30 cents away, 60 cents away. I don't know any other leisure. Oh, well, that's not true. Let's see how Lynn is performing. Terribly. So here's something into the bearish camp. What's MGM stock? Is it just MGM? Yeah, this looks like it's sort of bottoming. MGM win. Oh, and Las Vegas Sands, LVS. Looks terrible. So there you go. There's the bearish camp. This is definitely bearish. So let's look at some retail stuff here. Walmart. Oh my gosh, we haven't even looked at Amazon. Walmart, Amazon. Walmart doesn't look that good. Wow, Amazon looks good. Yeah, Amazon looks great. So let's go over here to Nordstrom's. Wow, things are picking back up. I wonder what's been going on. Much knows, who knows? What did they advert bankruptcy or something? It's their Nordstrom's rack holding them together. So that's it. Super candid. Now, okay, let's go over day trading. And okay, so that's that. If nobody cares about day trading, then we'll catch you guys next week. But day trading. My plan, like I said yesterday, was wait for the opening range, which I consider the 15-minute range. Here is the opening range from the 50s to 75 or 80. You had a huge move up from the jobs report and payrolls, and a break above the opening range. So intraday, there's no way I'm going to be bearish. You can't be bearish. So even though, like I said, I was expecting risk to the downside, but just because that's my opinion doesn't mean that something meets my criteria to actually place money on that opinion. You can have opinions all the time. I don't place trades based upon my opinions. So, so then I thought, okay, cool. I can now be bullish intraday. However, things are still at sort of extended levels. Sure, there's a bunch of people that are trapped all in here from the previous day looking to just break even and get out. It happens all the time. It's just basic human emotion. So you have all those things, mixed together. I'm not looking for any home runs on a day like today. So that's my thinking. We'll see if this, worked or not for me thinking like that. So, and again, there's a bunch of trades that were placed today. We'll go over the bulk of them. Not going to go through every one of them. There's a couple trades within each one of these I'm talking about they all still match the general theme. So trust me, by the end of this, you'll be like, can we just please end this? Okay, so the very first trade, 6:48 this morning, was a short placed, 21,844. So, where are we? We're up here. Yeah, see? So 6:44. Okay, so why would I go short here? Look at this on the 5-minute chart, very extended levels here, and things sort of started to roll over. So then I'm thinking to look for a short position. And remember, the first 15 minutes, I'm really not, or 30 minutes, I'm really not trading in here. It's sort of a rule I have, first 15 minutes I don't, and also the last 15 minutes I don't. So I'm looking to ride this back down, but I'm still bullish intraday, but so anyways, looking to ride this down. 5 minutes now, we're coming back here into this 2-minute chart. So 644 short 21,844. Put the stop at 21,856. My stop gets hit for a loss of 12 points. But just because I lose on that particular trade doesn't mean I'm switching bullish. In fact, I'm going after this again. I'm going to hammer this sucker again. But instead of trying to hold it for a longer period of time, I'm going to be a little bit more conservative. Is that the right approach? Clearly, that was not the right approach. Definitely something to learn from, and here we'll go over it. So anyways, I'm going to hammer this sucker again, a minute later, 30 seconds, whatever, at 6:49, I go short 21,861. So yeah, up right here, set the stop above here. I also had some shorts in ES as well. So it wasn't just NQ, but again, we're not going to go over those. It's all this same time frame, same principle. And instead of looking for a big move, I'm going to look for a smaller move because, I was stopped out. Now, I think that is something that is the wrong mindset to have. But like I said, we're learning with day trading. We're continuing to get better with it. So, anyways, 21,861. We cover that short at 21,854 for a 7-point gain. Like I said, there was other ones in ES. Okay, there's that. Now let's move over. Okay, so let's see how all these things are playing out in real time. So I'm trying to short all throughout in here. Bump, 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 bump. Getting short. And then I'm going to get out right here, right? I'm not looking for a home run at this point, which turned out not to be the right decision. So then we're going over here, and this, again, looked really good to get short, but I didn't. It turned out to be a wrong decision. That's definitely something to learn from and something that I will do in the future here. This was a great place to get short again. You're only risking, 10 points, right? That's not a terrible risk to reward. Depending on how you manage that, it can be a pretty terrible one, but a single contract, 10 points, whatever. So then as these things are playing out here, okay, look, we start making some sort of a range in here. Okay, pretty obvious range in here. So I'm looking to play this range. Now, given the fact that I'm relatively bullish intraday, I'm looking to get long all throughout these areas and take advantage of maybe half of this. So we're looking at roughly 8-10 points for me specifically. Clearly we've got about 30 points of movement, which is quite remarkable. And all these things happen very quickly on a day like today. So, I guess we don't need to go through every single one of these trades. I just explained the whole process in there. But we've got 13-point gains in there, 3-point loss. Let's see how. Let's go over this loser. 715. Where are we at? 715. 21,840. 840. Oh, okay. So 21,840 to 21,837. My stop was hit. Now, because this is some sort of wedge or flagging pattern, a breakout and move higher is very bullish, and you can get a monstrous move in a very quick amount of time. However, if it fails, that's super bearish. So I'm going to keep a tight stop on here. So you take a 3-point loss and move on. And then here we go. Here's how am I thinking. This is all in real time. So you have this that breaks this to the downside after giving this false breakout to the upside, giving that back as false breakout. This breaks out to the downside. So now you're just chilling. This next candlestick, another huge move. I mean, these are huge moves. We're looking at a 2-minute chart, from 811s to 828s, 15-point move, and just bink. I'm not going to chase this. I'm not chasing this right now. This is a don't do anything moment. So then everything just tanks. Now I'm switching, sort of bullish through here. So let's see. Do I have any of these in here? What time frame are we at? 7:38. Yeah, so 7:38. Looks like I probably missed that move. Yeah, so 7:38, 21,812 to 21,823. Oh yeah, so this must have been it. I missed this move, so I'm gonna wait for a pullback. So I get in 21,812, 823. Again, you're looking for nothing crazy today. Like I said, today I'm looking to hit singles on a day like today. I'm not looking for any sort of home runs or grand slams, just because the overall markets, I don't believe, have much upside in them. They certainly could, right? But I have a plan, and I stick to the plan for the day, and that's it. That's it. That's my whole goal. So anyways, why 823? Because it's pretty, because I think you can get 826, 827, 828, maybe 830, but I'm trying to be conservative, and you're going to hit, 823, with a pretty high probability of hitting 823. If it crosses over 820, you're going to get another 3 free handles out of this move. Okay, so that's that. 834. Let's go. Okay, so 834. Yeah, so all of this, you stay out of this. Why? Because let's go out to the 5-minute chart here. This whole move is happening at already oh wait, where are we? Oh, yeah, we're all in here. Okay, so Oh wait, I was way too far forward. Yeah, so this is already, extended levels up here. Stochastic, you can see, is up here. I generally don't go for intraday trades with the stochastic up here in the 80s. I typically don't do that unless it's a trend day, which this was not that sort of a day. And then you get a huge selling. I mean, these are crazy moves. I mean, this was a fantastic day for trading range. So a huge unexpected move like this, I'm going to be more cautious moving forward. So again, just a couple more, 11 points, 10 points, 10 points. Okay, then 940, where is it? Oh, in this area, 21,773 to 21,783, another 10 points. And then, I didn't really catch any of this move because nothing in here except for this. This was obvious. I don't exactly know where I was, what happened. Maybe I wasn't around the computer. I don't really know. But then all of this is no longer obvious. This is not a good risk to reward. You're right in the middle of the range of the day at sort of extended levels. However, this just kept grinding higher and made a monstrous move, right? So again, that was my opinion. That was my trading style. Clearly that was the wrong decision to have made. I mean, this is a huge, fantastic move. But you have a style, you stick to it. No strategy is ever perfect. And so that's why we, kind of learn from this. Now, looking back on this, would I have done something different here? No, I wouldn't have done something different here. So we're just chilling. I took a loss later on in the day, 1226. So like right here. Okay, so then here's my mindset in here. I wanna catch. This is very strong. I wanna catch, a nice move out. So as I'm poking and prodding to see, is this going to be a sustained move out? This looks fantastic. I make a couple trades in here. And if this would have continued higher, I would have, pressed on the gas pedal and rode this, for a potential breakout. But this failed. So now I'm like, I'm probably not going to do anything. This, again, look, failed. Selling. Strength, selling. Selling. Again, all the strength, boom, sold again. These are clear tells, like stay away from this. Again, look, it's rolling over. These are clear, saying don't go long here. Don't go long here, which I did. Oh, not quite here. Okay, so let's see if it gets any better so I don't look so stupid. 1220. Okay, next candlestick right here. Yes. So right here, this was a huge move. Very quick, add some juice in there, some oomph, and so I went after it at 21,812. So yeah, right here with the stop at 21,803, which stopped me out. Right here. What is that? Like the literal low? Yeah, it was. For 11-point loss. And so then that's it, right? That's it. Boom, call it a day, forget about it. It's the end of the day. It's a Friday, really good day overall. Way better than I expected, right? This was a really cool, easy day to day trade for me, for my style. Markets were up, Bitcoin was performing well, Argentina had a nice bounce back. So what am I chasing here? What am I trying to do? Nothing else I'm trying to do. And then we get into the last 15 minutes, which is a no-go unless it is a serious trend day, then the last 15 minutes can be crazy. But we were not in a trend day. Now, see, here you go. Look at this. The 1250 hits. Let's zoom in here even some more to 2-minute charts. I mean, these moves are just spectacular. So, this happens in a split second. Where is this? So 30-point move in a split second. Just bink, 30 points. So, yeah, huge move. Boom, 30 points. Gives it all back, right? These are the end of the day that you don't want to mess with. And then, yeah, boom, just dumps here at the close. Yeah. So yeah, right. Again, so today I don't like trading in the first 15 minutes 90%, 99% of the time. However, today you're like, what are you, an idiot? Why aren't you trading in the first 15 minutes? You would be a millionaire, right? But, again, the same thing with the last 15 minutes. I can't tell you how many times the last 15 minutes has been an absolute banger. Whereas today, it's rule number 1 is capital preservation, and there's rules for a reason. The first 15 minutes really, really is quite like gambling. There are certain setups that are good to try and go after, but I can't tell you how many times I've gotten wrecked in the first 15 minutes, and that's basically why I just said, all right, I'm not going to do the first 15 minutes, and that's what's most important. So that's really it for the day trading. Now next week, I don't know. This is such a suspect sort of pattern. I'm super neutral at this point. I'm neutral overall. I'm bullish given everything that we've discussed in this video. But very short term, I'm neutral. However, money's certainly moving out on the risk curve. And hopefully it moves out even more to Rumble on Monday with me. All right, guys. I'll catch you all next week.